Facebook filed for a $5 billion IPO this week. Did they jump or were they pushed? Let's look at why Facebook really had to register with the SEC and how registration with the SEC is a big step towards IPO, so they may as well IPO at the same time. The Securities Exchange Commission in the United States, the SEC, was set up to enforce the securities regulations that came in place in the 1930s after the Wall Street crash. And those regulations were set up to protect US investors. And the way they protect investors is primarily by forcing companies to register with the SEC and to provide accurate information to the SEC and therefore to other investors, to the shareholders, so that the shareholders, those mom and pop investors all over the United States, can base their investment decisions on accurate information, and disclosure by the companies of all accurate information is required by the SEC. Registration means filing annual and quarterly reports with the SEC. Doesn't necessarily mean selling shares. You can register and you can actually start filing your reports with the SEC without raising shares in an initial public offering IPO. Now, one of the other aspects of registering with the SEC is that the Sarbanes-Oxley corporate governance regulations attach to companies that are registered reporting companies. Now, the Sarbanes-Oxley regulations are quite expensive for companies to administer. They create a lot of administrative burden on the companies, and people have estimated the cost can be at least, on average, $1.7 million a year just to comply with Sarbanes-Oxley. But for larger companies like Facebook, the costs are significantly higher. So registration is quite costly in terms of not only the legal fees and so on of actual registering, but then there's the accounting fees of submitting your reports to the SEC each quarter, and then there are all the compliance costs that go into complying with the Sarbanes-Oxley regulation. Now, registration with the SEC is required when a company is raising finance from public investors. So this would be required as part of an IPO. Before the IPO, the shares are sellable to investors. The company must register with the SEC, and the SEC must approve those shares to be sold before they're sold. However, registration is also required when a company has more than 500 shareholders. This applies to companies greater than $10 million in assets. Of course, Facebook is far greater than $10 million in assets. So this requirement to register with the SEC with having more than 500 shareholders will force Facebook to register with the SEC. Now, could they circumvent this 500 shareholder rule? Lawyers may argue, and this has been done in the past, they try to combine several shareholders into a single record holder. And the record holder is what the SEC regulation requires. There has to be, if as soon as you hit 500 record holders, then you trigger the requirement to register. So this is kind of a way of circumventing the SEC's regulation. But the SEC will clamp down on this. They are clamping down on this. The SEC is expert at removing any loopholes from their regulation. So if Facebook tries to argue that 100 shareholders are really only one shareholder because they're actually all combined and they're only processed as one record holder, then the SEC is not going to stand for that for very long, and it's just a matter of time before Facebook is forced to register with the SEC. So Facebook has to report If it's forced to report, it might as well IPO, because IPO is just a registration with the SEC combined with a sale of shares to the public. So Facebook was forced to register. The financials are now open to public scrutiny. There are no secrets that could be held back to protect Facebook from its competitors and so on. The information has to be made available to the public and has to be accurate. So it's now a reporting company, and there are very few secrets that can be held back by Facebook about its business, because investors need to know. Sarbanes-Oxley and other regulations mean lots of reporting, liabilities, red tape. Lots more lawyers need to be hired by Facebook, and there's a financial burden attaches to all that. But Facebook shares are then sellable on the public markets. Furthermore, the IPO means that $5 billion will be put in the bank by Facebook. So it's probably all worthwhile in the end.